It's the season of investor conferences, and we have Shiv Diwan, the co-head institutional equities at Edelweiss Securities, and Gautam Shroff, co-head institutional equities, Edelweiss Securities, joining us now. Okay, both institutional sales. Gentlemen, thank you very much for joining us. Well, let me start with you, Shiv. What's the main message to investors? I mean, considering that the economy numbers are not looking too good.
No, I think you've already seen a slowdown in the GDP numbers. Inflation has sort of remained benign, or in fact soft. So and obviously markets after the whole election rally have probably become a little bit expensive. So at 18.5 times 1 year forward, we do believe that it's one of the most expensive times we've seen. Even as a premium to the emerging markets, this is almost 60%. So clearly, we do expect that some of the quality names may continue to do well, but I think that markets will trade in a range from 11,800 to 12,200 till we see some more clarity emerge on the liquidity situation. And of course, the hope is that we've seen crude come off a little bit. If that continues, then that could be great for them, because otherwise trade wars also will continue to create a mess.
Okay, Gautam, good morning. Your thoughts? Do you think this liquidity-driven rally has more legs?
I think flows will continue only if we see action from the government and the RBI together. Mm-hmm. So action is something which is much required. We have policy this week, anywhere between 25 to 50. If they do 50 basis point, then that markets will surely cheer that, because 25 is almost like a given and that is already priced in. So that is something that will really help in action, and flows will continue only after we see that decision come through.
Our MPC, we have a citizens MPC which did its deliberations on Saturday. They have voted unanimously for 25 basis, and the argument against 50 was that anyway even this 50 has not gotten passed on, so Reserve Bank may hold the firepower. I mean, I just thought I'll tell you.
Okay, so if there's a 50 basis points rate cut, then that will cheer the market. But Gautam, what's your sense on auto stocks now? I mean, after the slowdown we've seen, numbers are getting incrementally worse by the month. You think you're still cautious, or are you looking to buy any of these larger names, M&M, Maruti, etc.?
So we've been negative on auto for a while now, and I think this will continue till the liquidity situation improves. But at the same time, if you just see today's data, M&M is kind of still been resilient, maybe because of the new model launches. Every auto sales number has dipped except for M&M. So I think new model launches clearly help. Even in the two-wheeler space, there are 2 new launches this week by Eicher Motors. So I think new model launches could kind of help them arrest the fall in the market share. And would want to watch out, how the market responds to that.
Okay, so you're saying auto sales down 3% is the good number at this point in time. I mean, for M&M, at least it is not down 25%. Yeah, I take your point. It's certainly better. But Gautam, what are Shiv, what are the investors telling you? Both the companies and the big investors whom you may have spoken to.
So I think, like I said, that they have reached attractive levels, in terms of valuations, but consumption discretionary really has gone through a lot of pain, and this is largely again driven by the liquidity crisis that we've.
Are they saying there are green shoots, the companies? Like Mahindra's?
So. Yeah, I don't think so. I think there is still some pain, and obviously the numbers seem to suggest that. And till that situation doesn't improve, I'm not seeing people coming to the ground and suddenly starting to buy. Of course, inventory levels have also been high in the system for quite a few of the guys, especially Maruti. But I do believe that if we have 6 months of improvement in liquidity, then you will start seeing signs of improvement in autos as well.
So
as
second half.
Okay. So second half of the year is what we are calling for.
So Shiv, what are the kind of stocks and sectors that you are buying right now? What are you pushing to your clients?
So, in fact, interesting you say that. From our conferences also that we're doing in the US and UK, we've actually got an interesting list of companies. So we've got Tata Motors, Eicher Motors, Motherson. We've got that entire auto flavor, which obviously is not the flavor of the season. Yeah. But we still believe that, this is the right time to start working on these names, because maybe in the later half of the year, they will be the ones that will perform, because valuations, like I said, have been very attractive.
I was also interested in the view on PSU banks, because that's been the best performing sector this month, in the month gone by, that is. Gautam, your thoughts on names like SBI? Is there still some more, a time to go on the upside?
We clearly like SBI amongst the public sector pack, and I think there is some more legs. In fact, today Axis might disappoint given that RCOM's exposure disclosure has come through in the weekend, but I think SBI will continue. And because if it's a broad simple call, if Indian economy, the call is going from $2.4 trillion to $5 trillion, then you cannot do it without an SBI, somebody who has a branch every street. So SBI has to participate and will do well.
Actually, I knew about Axis Bank's RCOM exposure, so I'm a little surprised. Okay, but Gautam, would you look at things like real estate, which are beaten down, expectation of rural housing now being pushed with renewed vigor? Cement has already done well. How about that space?
So, of course, we like, but in selective pockets, somebody who's into low-cost housing is, of course, going to be more favored. As you said, affordable housing is going to be the key theme, and our PM's dream of everyone should have a house, of course, that will play out. But we'll be very, very selective in that space. Realizations for real estate developers have gone up by 6 to 7% after ERA, but sales volume is something that is still not picking up. So we would buy, but very selectively.
So, Gautam, what about the housing finance stocks? That's one area which is still under a lot of stress, a lot of stocks at least. Anything that you want to buy at current levels?
So HDFC has been our top pick, and we like HDFC a lot. I think they will continue to gain market share and rule there, given many of the smaller and weaker players are kind of being shaken out, or not even disbursing. So it's for the market share is up for grabs with HDFC to go.
So this year, I mean, although consumption has slowed down, stocks like Titan, etc., have still given you the best returns. I mean, it's still up about 35% for the year. In this pocket, Gautam, your top picks?
So I think Titan, of course, is a very broad-based company now, not only about watches. And Tanishq, as I said last time also on the show, that Tanishq is something, so nobody goes to an individual jeweler or a smaller jeweler after Nirav Modi fiasco. So many of them are just going for the Tata's brand name and trust, and that's why I think Titan will continue to do well. Plus they have diversified very well. They are into new products and the continuous launches there. So we are bullish on Titan as well.
Shiv, more broadly, are you all backing large caps or mid caps? Because the mid caps are the one where perhaps there hasn't been that kind of a runaway rally.
So I think I'll be a little more sectoral on this space. So I do believe that there should be some sector rotation into the likes of cement, infra, capital goods and industrials, and of course private banks will continue to rule in that sense. So those are the sectors which I would kind of like. Of course, there are some mid caps that offer a serious amount of value in that space. So those are the ones we'd go after. And amongst the larger names, of course, the likes of ICICI Bank, HDFC Bank, Reliance, Infosys, those are still the names that we continue to push. So I know it's consensus, but that's something that we still continue to like.
Okay. Are you expecting only a rate cut and generally more OMO sales from the Reserve Bank? Or is it, that you all are penciling in something out of the ordinary, like that 2008-9 stressed asset sale or something like that?
So we're not very sure about that. There is a camp in the market also talking about a CRR cut, but I don't know how, along with an OMO that is continuously being announced and RBI being very cognizant of the fact that liquidity is tight, so the OMO is of course helping. So at the most, I think they could surprise with an additional CRR cut, which will bring in about, even if it's 25 basis point, about 40,000 crores of liquidity straight comes to the banks and in turn to the market. So that is something that could be one surprise.
Okay, Shiv, we haven't spoken about pharma at all. Sun Pharma, of course, has gone through its own issues. What's your thought process? And when you talk to your clients, what's the view on Indian pharma space right now?
So I think pharma is a space that is best avoided still. They still have got a lot of pain coming through the US FDA and their own issues. Anyways, it's becoming far more competitive in the US. So US sales have been falling. Companies which are probably doing the generic stuff are not going to do well at all. We'd like to stay away from pharma even now. We have one or two ideas like probably Reddy's, which is what we like. Lupin, we think the worst is over, so it may offer value from here. But that's a sector that we would still avoid. I think if you have to play defensives, probably IT is the better way to go about it.
Within autos, you said that M&M is resilient, so you would like that. But what about something like Hero MotoCorp? Shiv, your thoughts? Because month on month we've seen a bit of an improvement. You think the worst is over for the two-wheeler sector?
So yes, I do think that the worst is definitely over, but like I said, for things to bounce back, there has to be some liquidity that's injected in the system. I do believe that if these OMOs and rate cuts come through, that will definitely help. What that will also do is help the labor, help setting up more jobs, and generally risk appetite will come back into the system, and that's when your two-wheelers and some of the CV players will do well. So I had said Ashok Leyland is something that we kind of like in that name, is in that space as well. And I think, if the CV cycle were to come back, then that would be the first one off the blocks.
Okay, gentlemen, have a great conference. Thank you very much for joining us with your thoughts. So,
Thank you so much.
broadly 11,800, 12,200, and expectations that a real economy pickup is probably in the second half of the year. That's the state of the economy and markets from Edelweiss. Let's move over now to what's happening in the commodity space. Lots happening, and that's going to be the big bullish boost. The bearish crude oil, isn't it, Manisha?
Oh, well, yes, Lata. The month of May actually has been quite a turnaround. The first monthly decline in 6 months, and the worst month of May in 7 years is what the crude oil prices have done, with nearly 10% decline coming in for the US crude. And we're almost $10 down from the kind of highs that we've made in the month of April as well. So very sharp declines coming in. It has to do with the strength in US dollar, the stalling demand, the fears about the global economic growth as well. US and China, if that wasn't enough, now US is telling Mexico as well that they will be putting tariffs on all Mexico imports at 5%, increase it to 25% in October, and that seems to be bothering as well. Add to that the US rig count, which has continued to gain. The US production in the previous week is at a record 12.3 million barrels per day, and that seems to be pulling the crude oil prices down. It is looking weak on charts, and further declines are not ruled out. It is a similar scenario for the metal prices, where you have seen the copper prices decline by 8% in the month of May. You have zinc falling 11%. Tin was down 5% as well. So the month of May also has closed on a negative note. Keeping iron ore aside, but that also has seen a decline today, with nearly 3% down in Shanghai today. The steel prices also are trading at a 2-month lows. So everywhere that you look, the industrial commodity prices have started a new month on a much weaker note.
Okay, well, thanks a lot for that. Not looking good as far as the data is concerned.
The metals will take the
brunt of the sell-off. All right, let's take a short break on that note, but we have less than 10 minutes before the pre-opening rates kick in. Also, plenty of stock advice coming through from SP Tulsian of sptulsian.com, so do stay with us.